Hi, and welcome to the first APAC Policy Update of 2023 from Chainalysis. I'm Chengyi, Head of APAC Policy at Chainalysis, and I'm here to recap some of the major digital asset policy developments in the region over the past few months and what we're looking out for in the coming quarter. First, a quick legal disclaimer. This content is for informational purposes only and is not intended to provide legal, compliance, tax, financial, and investment advice. We encourage you to consult your own advisors in this regard, and we reiterate that Chainalysis is not responsible for any decision made or any action or non-action taken in light of this material. So it's been a busy few months for regulators in APAC, and we'll be covering policy developments in Hong Kong, Singapore, Korea, and Australia for this edition of the Policy Update. Let's begin with Hong Kong, which has been the subject of intense industry interest since the authorities declared their intention to position the jurisdiction as a digital asset hub late last year. A key plank of that ambition is an enabling regulatory framework, and the Securities and Futures Commission has made progress on that with the finalization of regulatory requirements for virtual asset service providers, which have been subject to mandatory licensing under the AML ordinance since the 1st of June. The new regime focuses on the licensing of virtual asset exchanges and allows for the first time licensed virtual asset trading platforms to serve retail investors. Even so, retail investors will only be able to trade in so-called eligible large-cap virtual assets, which are included in indices published by at least 2 independent index providers. The new regime also includes a comprehensive suite of measures, including but not limited to requirements on customer suitability, token due diligence, segregation and safeguarding of customer assets, market conduct and market integrity, as well as detailed AML CFT requirements. This package of rules marks an important milestone in Hong Kong's roadmap towards becoming a virtual asset hub, and it's a strong signal that the authorities intend to keep standards high even as they pursue innovation and growth. The new regime took effect on the 1st of June, and many digital asset players have already indicated their intention to pursue licenses onshore. The SFC will be issuing further guidance in the form of circulars, frequently asked questions, and a licensing handbook for common questions relating to the new regime. So with that, let's turn to the other international financial hub in Asia and Hong Kong's frequently cited competitor, Singapore. In May, the Monetary Authority of Singapore issued a consultation paper on changes to regulations and notices under the Payment Services Act. The driving force behind this consultation paper is the Act amendments passed in 2021, which will bring digital asset players such as brokers and custodians under the regulatory ambit in Singapore. The proposed changes to subsidiary legislation are needed to effect those Act amendments. Let's move on now to Korea, which is one of the largest digital asset markets in East Asia. In May, the South Korean National Assembly passed amendments to the Public Service Ethics Act, requiring high-ranking public officials across the executive, legislature, and judiciary to disclose their digital asset holdings for transparency and prevention of conflicts of interest. Looking more broadly at the regulatory landscape in Korea, the National Assembly also made progress towards passing the Digital Asset Basic Act, which is intended as the overarching legislative framework governing digital asset activity aside from security tokens. The Digital Asset Basic Act has been broken into 2 parts, and Part 1, the Virtual Asset User Protection Bill, has cleared the National Policy Committee in the National Assembly and will be reviewed next by the Legislation and Judiciary Committee before going to a full parliamentary vote. We expect the bill to be passed in the second half of 2023. Now let's move on to Australia, the land down under, where in April, the Attorney General's Department launched a public consultation on modernizing Australia's anti-money laundering and counter-terrorism financing regime. For digital asset players, there are a couple of key implications from the consult. The first is that going forward, AML-CTF obligations will be imposed on a broader set of digital currency activities and hence a broader set of digital asset players. The second key implication is that virtual asset service providers would be subject to the so-called travel rule, which requires the exchange of originator and beneficiary information between virtual asset service providers facilitating a virtual asset transfer. While the travel rule is an international standard set by the Financial Action Task Force, each individual country has chosen to apply it with slightly different parameters, so we'll be keeping an eye out on the exact shape of the rules when they're put forward. This consultation paper marks the start of the review process for Australia's AML-CTF regime. After the consultation closes in June, the authorities will review feedback and issue more granular draft proposals around September. and we'd expect legislation to follow thereafter in 2024. That brings us to the end of this quarter's APAC Policy Update. Looking ahead, there are a couple of key policy developments on the horizon that we're keeping a lookout for. In Singapore, we're awaiting a response to the consultation proposals issued last October on business conduct for digital payment token service providers. And in Australia, Treasury is expected to issue regulatory proposals on digital asset custody. We're expecting both of those around the middle of the year. Thank you for your attention and stay tuned for further updates from the Chainalysis Policy team.